Mortgage rates are up since the election, and it comes down to a few key reasons why. First off, conventional rates are sitting right around 7.125% today, and your FHA and VA rates are about 6.5%. Reason number one, the Trump trade. Since Trump got elected last week, money has been flowing into markets. Bitcoin is past $90,000. The S&P 500 and the Dow are all up a little bit. Bond yields are rising, which means bond prices are falling, and that's because money is flowing out of bonds and into the markets. And when bond yields rise, mortgage rates also tend to rise with them. So that all makes sense why we're seeing that. Reason number two, we got the CPI report from October out today, and that's showing that inflation is still on a somewhat down or at least stable trajectory, showing a year-over-year inflation of 2.6%. Weekly applications for unemployment claims is slightly dropping over the last few weeks, so all that points to a somewhat resilient and strong labor market, which means less Fed rate cuts and higher mortgage rates. Reason number three, retail sales are also up 2.8% year over year since last October, and of that average 2.8%, food and beverage service sales are up 4.3% over a year ago. What that tells us is people are still out there spending money, and that generally the economy is strong enough to keep doing that. So that's going to keep our mortgage rates also on the higher side. And reason number four, the Fed Chair Jerome Powell came out yesterday in a press conference saying that the economy is doing remarkably well and that they are in no hurry to keep lowering rates. Now, we do still expect the Fed to cut rates by 0.25% on the December 18th meeting, but after that, that might be the last Fed cut in a while. So I would say mortgage rates are kind of going to stay where they're at right now, those low sevens and mid sixes, depending on which program you're using. And we'll have to see what comes in 2025 to determine what we think will happen next.